Be Wealthy and Smart, episode 1571.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about what extreme crypto volatility means. Because these are not normal things that happen in the market. Yes, crypto has exceptional volatility, much more than stocks, but it also has the volatility on the upside. Recently, I was looking at some of the returns for XRP, and I went over to MoneyChimp to determine what is the compounding rate for the last 5 years for XRP, because it's been up 1,100% for the last 5 years. And what I determined was that's an average annual compounding rate of 62%. That's right, XRP's averaged 62% for 5 years. That means that it is performing like 2 to 6 years in the stock market. Let me explain. On average, the stock market historically, the S&P 500 that is, goes up about 10% per year. Now, the last few years, the S&P's been up 20% per year. So if XRP is averaging 62% a year, that's 3 years of 20% in the S&P or 6 years of 10% returns in the S&P 500. So you're getting 3 to 6 years returns that you would be getting in stocks for every 1 year that you invested in XRP. Kind of mind-boggling to think about. So what happens when we have extreme volatility like we had last Friday? When I see extreme volatility, I think about the hedge funds. Hedge funds are like extreme investors that can invest in any sort of activity in order to generate returns, basically. Now, there are some exceptions, but when you're talking about crypto, since we don't really have a lot of laws surrounding crypto, that means all kinds of things that aren't okay in the stock market are okay in the crypto markets, at least for now. And the hedge funds take advantage of volatility. Volatility is their friend, and that's how they make extraordinary amounts of money, because they use leverage, and so a small move can be magnified, either on the way up or the way down. And if they can panic a market, they can use that to work in their favor. So let me explain. When you've had crypto go up to hit new all-time highs like Bitcoin just did recently, that means everybody's in profit. Everybody who ever invested is in profit when you hit a new high, because the person who bought the trade right before the new high is even in profit because you've gone to a new high. The hedge funds know that. And if they see a big move coming on the horizon, like starting the peak move that is going to take us to the top of a 4-year cycle, they are going to position themselves and use it to their advantage. Because everyone's been so bullish with the markets hitting all-time highs, especially Bitcoin, and people being positioned on the upside where many traders were leveraged up to 100 times or more, expecting markets to move higher, if they can trigger selling, all of those people who are highly leveraged on the upside are going to have to close their trades and cover. That means they'll have to sell. If they're on margin, it'll be a forced sale, where the brokerage will automatically sell to cover the debt. The hedge funds know that there are massive catalysts that could lift XRP's price. Besides the 22 potential ETFs that have been applied for at the SEC, we know that this administration has some things on its plate that it's looking at, such as allowing money to flow into 401k plans, such as talking about no tax on U.S. crypto, such as the crypto stockpile. That we have in the background. Economically, we have interest rates that are reducing, a falling dollar, precious metals going crazy, and the Fed even having a crypto conference to talk about payment innovation on the 21st of October. Then you have Wall Street firms who are allocating 4 or 5% of their asset allocation models to crypto now. My former employer, Morgan Stanley, just approved a 4% asset allocation to all investors, whereas prior to this, they were only allowing crypto to be purchased by people who had $1.5 million in their investments. Now, as I understand it, they've opened it up to everyone. When the government comes back in, we will have the Clarity Act being addressed and hopefully passing at some point, as well as potentially addressing no tax on U.S. crypto. Ripple is looking to get its Fed master bank license, and we have overall institutional adoption happening in the background with the big wave of money coming in. I told this story on our monthly VIP Experience webinar, but I'll tell you the story that happened to me about 1.5 years ago when I was at a dinner table and met someone who was providing software for the casinos. And he told me that the casinos were already wired, their software was already installed for them to be able to accept crypto as payment. This was 1.5 years ago. But he had asked the casino owners, why aren't you using it? Why haven't you turned it on so that you can accept crypto right now? And he was told, we have to wait for the laws. So as soon as the laws are passed and people are able to offer crypto, we're seeing businesses and industries already ready to accept it. Industries like the casinos, they're already wired and ready to accept crypto. They're just waiting for the laws to be passed to tell them that they can do it. And recently we saw Walmart is accepting crypto through an app, and this is going to happen across every retailer as crypto gains legality and legitimacy as a currency. And we have the laws removing any capital gains from selling your crypto so that you don't have to pay capital gains to buy a cup of coffee. That just doesn't make sense. So once the proper laws come into effect, we're going to see a lot more adoption of crypto and a lot more utilization of crypto. And some of that extremely positive news is what's going to drive us into this exponential part of the top of the 4-year cycle. So this sharp pullback by the hedge funds tells me we're just about ready to start. And that lines up with what I've been seeing right around the November 1st time horizon for the beginning of this incredible time that will bring us into the peak of the cycle. This has happened basically every time before we've had a major, massive move higher. So usually when I see a huge dip like that, it tells me we're very close to starting potentially an exponential move higher. And because we're in the 4th year of this cycle, and I've been projecting that that will start in November, it's my estimation that we are extremely close to starting an incredible exponential peak performance for a few months. So what I can say is that this is a good time to buy the dips. It's a good time to set automated buy orders because we may have another wave of selling come through and you may get those executed. So you can set some low target prices and see if they get automatically triggered, but you have to have the cash to cover those trades in your crypto account. So you can set those up at Uphold or Kraken or Coinbase. And I'm hearing that those did get executed in this last go round. So in summary, to me, we're getting very close to the end of being able to buy low. If that's something that you want to do and you've been waiting to put some transactions in and buy, in my opinion, this would be a very good time to do it. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.